Welcome to The Explainer, where we break down the big picture behind the headlines. So today, we're going to look past the day-to-day price charts to really understand the massive forces that are reshaping the entire world of crypto, from Wall Street all the way to Washington and beyond. Okay, so let's just dive right in, because what went down this week really shows you just how plugged in crypto is to the traditional world of finance. I mean, it is the perfect example of how one little whisper can literally start an earthquake in the digital asset space. And it all starts with the spark, right? A single hint from the U.S. Federal Reserve Chair, Jerome Powell, that just sent these massive shockwaves through the market. It really proves that even in the world of decentralized finance, all eyes are still glued to the Fed. So, picture this. At the super influential Jackson Hole Summit, Powell uses some very careful language that the market immediately read as dovish. Now, what that basically signals is that cheaper money, lower interest rates, might be on the horizon. And for assets like crypto, that's like hitting the gas pedal hard. And boy, did the market react. It was instant. Bitcoin, which had been kind of stuck at 6-week lows, just suddenly broke free. It rocketed up towards $116,000 as the US dollar took a dip. It's just a classic case of how one comment can completely flip the market's momentum on a dime. And the ripple effect? Oh, it was powerful. This wasn't just a Bitcoin story, not at all. Ether had this massive 13% surge, just blasting through key resistance levels to get back to nearly $4,800. And that move has traders absolutely buzzing again, putting a $6,000 price target right back on the table for the end of the year. But here's the thing, what's really powering this is so much more than just one comment. Let's zoom out for a second and look at the huge structural change that's coming. We're talking about a potential flood of new money that could make everything we've seen so far look small. You see, when you hear these super bold predictions, like this one from Bitwise's Andre Dragosh, they're not just based on market hype. They're looking at a fundamental change in who is even allowed to invest in crypto. And the scale of it is just staggering. To really get why this is such a game changer, you have to wrap your head around this number. The U.S. retirement industry. It's a massive $12.2 trillion pool of capital that, up until right now, has been pretty much entirely locked out of digital assets. And then, bam, a recent executive order just completely changed the rules, giving Americans the ability to get into digital assets through their 401k retirement plans. The floodgates for all that institutional and retirement money, they are definitely starting to creak open. And this is where a tiny change can have an absolutely colossal impact. Analysts have run the numbers, and even a super conservative 1% shift from that retirement money would pump over $122 billion of fresh capital into the market. To put that into perspective for you, an inflow like that could literally dwarf the initial impact we saw from the spot Bitcoin ETFs. All right, so this whole institutional shift, it's not just a US story, not by a long shot. It's going global and fast. Major economic powers over in Asia are making their own big strategic moves, turning the future of digital money into a really high-stakes competition. I mean, just look at the global chessboard right now. Japan is getting its first yen-backed stablecoin ready. China is looking into a government-backed yuan token. And India is actually rethinking its really tough tax rules. These aren't just random events, you guys. This is a coordinated shift by economic heavyweights, and it's signaling that the race for digital money dominance is officially on. But with all this explosive growth comes the dark side, right? While all these governments are racing to innovate, they're also cracking down, and cracking down hard, on all the fraud, the scams, and the illegal stuff that's been plaguing the industry. And this really highlights a huge problem for regulators. With fraud complaints around crypto ATMs just going through the roof, what do? Do you bring down a blanket ban that punishes millions of totally legitimate users? Or do you try to find a smarter solution, like on-site warnings, to stop the scams without killing access? It's a really important debate that's happening right now. And believe me, the risks are absolutely real. In this massive global operation, Interpol and authorities in Angola took down 25 illegal mining centers. They arrested over 1,000 people and seized assets tied to a $100 million fraud ring. This could be just the first domino to fall in a much bigger global crackdown on this stuff. At the same time, you've got these on-chain detectives who are uncovering some incredibly slick scams. So in this case, check this out. An insider wallet bought up a new token, YZI, turning 250 grand into over $1 million in just minutes. And when they dug deeper, they actually linked that same person to a massive $21 million scheme on another token. This was someone with clear inside info. So, with all this chaos and all this big institutional money pouring in, it really makes you wonder, where is the real innovation happening right now? Well, for some of the smartest money in the space, the answer might be somewhere beyond Bitcoin itself. Take this. Billionaire investor and, an early Bitcoin believer, Chamath Palihapitiya. He's raising $250 million for a new venture, but his target isn't Bitcoin. He is betting big on DeFi, the tech that's actually bridging the old world of finance with the new world of the blockchain. And one area in DeFi that is just seeing explosive growth is something called synthetic stablecoins. A project called Athena Labs, for example, just crossed $500 million in revenue for its protocol. That's a huge signal that there's a real hunger for new kinds of financial tools built on the blockchain. Now, this growth is being fueled by a totally new kind of asset. See, unlike the stable coins you might be used to, these aren't backed by actual dollars sitting in a bank account. No, they're supported by really complex algorithms and hedging strategies. Now, that definitely brings new risks to the table, but their market caps are just surging as investors are looking for new kinds of value and yield within this whole DeFi world. So all of this, the Fed's influence, the 401k money, the global race for regulation, the pivot to DeFi, it leaves us with one final, and I think really crucial question about the very soul of this industry. Is this the moment that crypto finally grows up and joins the mainstream? Or does it lose that rebellious spirit that made it so revolutionary in the first place? And that's why all this matters. Thanks for joining this explainer.